All right. Ready to kick it off, Greg?
Yeah, well, we're uh, we're short of Matt today, but we got a Russ. It's good.
Yeah, welcome to This Week in Lumber for March 8th, 2023. Matt is on the road traveling, but we've got a great guest teed up for us here after Greg and I go through the introduction. Russ Taylor from Russ Taylor Global, and he's going to help us size up and slice and dice all the statistics that we generally make up during the week when we're talking about them. So Greg, I wanted you and I had a little conversation. Let's start out talking a little bit about the market in the last week. It's an interesting market to say the least. It seems to be, as you said, prices are ticking slightly down on some things, maybe a little bit less liquidity. You could summarize what we've been through the last week.
Yeah, well, I mean, Ash, after having a really sharp 50% run up in prices in January, and then really a round turn, prices for the most part, not all came all the way back down, but a lot of them came significantly back down to where they were. Market's taken a pretty subdued tone here, and I think we're moving to that place where prices in Russ will talk about like cost of production and whatnot, but prices in a lot of regions are either at or below the cost of production, and supply's trying to get rationalized with where demand really is. And we're going into seasonally stronger time of the year, but that's being counteracted by kind of the cyclical lower overall housing numbers.
Yeah, and then let's add to that, from the experience that we've had in the industry, Greg, over time, prices can always go a lot lower, and it can always take a lot longer for mills to rationalize capacity than we all think that they're, because each one of them have their different reasons of why they do, how they do, the announcements they make, and maybe we'll talk a little bit about that with Russ also.
Yeah, and I mean, one of the things that I've kept thinking about, and I mean partially why I was so surprised by how sharp the run up was in January, was after the historic volatility and the record prices that we had from 2020 through 22. It would seem to me that the most logical thing for the market to do would be an extended period of low volatility, at plus or minus cost of production, to kind of force supply and demand to get in line.
Yeah. So what you're saying is the market's going to act like it normally does for the first, taking out the last 3 years of the first 30 of our careers.
Yeah, there you go. I mean, as you know, that there's not a rally in lumber that or any other commodity that producers don't figure out how to kill.
Yeah, that's for sure. Well, without further ado, let's bring Russ in. Russ, how are you doing?
Very well, thanks. Ashley, how are you?
We're doing really well, man. So where do we find you today? Are you up on the ski hill, or where are you at?
Yes, I'm up at Whistler Mountain. Been skiing earlier this week, and thought I'd take a day off and spend it with you.
What do they have up there, Russ? They got about, do they have like the same record snow that California's getting?
I'm not exactly sure, but the snow came a bit later. It came early, then nothing much in January. It's come hard since, so it's excellent skiing right now, and big base. Yeah.
So Russ, you were thank you so much. I got caught in looking at these slides that you sent the other day, and they bring up so many questions. You were at the global one of the global production conventions in Helsinki. Is that what was the Helsinki
Yeah,
presentation?
it was called the Wood from Finland conference. It's an annual event. I've been going for about maybe 10 years, and it attracts a lot of industry people and traders. So I got a pretty good perspective on how the Europeans are thinking and their views. So it's a really good perspective. And there's never anybody there from North America. It's so strange.
That's good. Well, so look at, I know Greg, Matt, and I talk a lot, and you help us in the comments a lot, sizing up production and so forth. And let's jump in real quick and talk about and bring up the North American softwood lumber capacity trends, if that makes sense. Greg, is that kind of how we wanted
Yeah,
to?
I mean, one of the things, Russ, is when in the market rally in January. I mean, some of it was triggered by announced curtailments of like permanently closing mills in BC, which, I mean, I think to you and I that's not really a surprise, since we're expecting that's going to be a continuing trend. And maybe talk about like where BC production is going to be this year versus last year, and where it may be over the next 2 or 3 years.
Yeah, for sure. And I do have a slide on the BC production. Which slide is that? Number 5. If you want to look at number 5, if you want to talk
Bring up
about
5,
BC.
Nick.
Yeah, and that really sort of tells the story with where BC's been, and it's just after the beetle epidemic, sort of the harvest peaked in about 2016 or so. It's been now we're running out of wood, and this is even more curtailment. So some 45 mills have closed in BC since the peak in 2005, all due to fiber supply issues. And even this last year, I mean, production was down 1.4 billion board feet. It was, the second half wasn't very good, and that's when curtailment started. But we've seen now, closures and further curtailment so far this year because of the low prices. But I expect production this year is going to be down about another, in 2023, down another, 10% or so. Just as 8 to 10%, because of the lack of wood and curtailments. Probably, if prices stay low, this is always a time when companies decide about curtailments. But we're getting close to the bottom. It depends on government policy too, because so much government policy is kicking in with the old growth deferrals and protecting caribou, which is why the Canfor Chetwynd mill closed. It was tied to a couple of things: First Nations and caribou all in one. Other beetles we've got, and government harvesting practices about landscape planning, taking away more of the cut. We're talking about putting in carbon capture for forests instead of harvesting them. That's coming into play, and the government's transferring tenures from companies to First Nations with wheat compensation, and then always wildfires are in the background. So all that's putting downward pressure on the long-term harvest, and probably about somewhere around 2025 or 2026, I think that's where we'll bottom out, and that still means a few more mills to close relative to the fiber supply. And closing a mill, that could be a shift down, knocking off a shift that some companies are doing, or curtailing a mill or completely permanently.
So you're saying another 10% decline this year, and then over the next 2 years, another how much?
Then probably skidding along. Some of the production declines this year will be curtailments, not permanent closures. So 2024 should be a better year. So production will come up, and then we'll probably see some further curtailments over the next couple of years. But another couple of mills, I think, is maybe where we're getting to, and it just depends on company strategy too, what they want to do and how long they want to hang in there. So, and it depends on government policy as well. Still lots of unknowns ahead, but certainly further declines inevitable in BC.
Russ, when you look at this chart, it really shows the production decline when you look at the picture, right? I mean, that's crazy compared to what we came from at the peak in 04, 05 versus the beetle kill in 14, 15, 16.
Yeah.
So where's all the lumber for North America to kind of come to fill this gap?
Well, I mean, at least,
yeah.
the other, it's just one side, the other
Yeah.
factor is when you look at the BC decline and when we think about the record profitability of the last few years and really going back 10 or 15 years, most every mill that was centered in BC has now diversified to the U.S. South and or Europe. And maybe go back to slide 1, Nick, that can show like the share of the market for Russ, and then go ahead, Russ. Sorry.
Slide 2, I guess.
Why it's important is as people hire people in these large companies and so forth, you need less people to buy BC Canadian lumber and more people to become experts on Eastern Canada, U.S. South, imported and so forth, if that makes sense.
Yeah, exactly. And this slide is not up to date, but I mean, it's showing the trends that, all the capacity growth has been in the U.S. South as the available timber supplies became available after the housing market collapse, and trees grow fast there. So huge surpluses of timber that are slowly, getting picked up. Like West Fraser closed a mill in Florida because the wood supply is very tight there, and other pockets are getting tighter, but there's still room for more mills. So there's still a few more greenfield mills coming, and so that's the growth in the U.S. South. And then, of course, so on the other side of the equation is the BC decline. This is sawmill capacity as well, not production, but nevertheless, it shows the production capacity dropping in BC. And then you've got the Pacific Northwest and Eastern Canada, well, east of the Rockies, so that's Alberta through to the Atlantic Canada. It's sort of steady capacity, no real significant increases in any region. So that's been pretty flat for the last 5 years as a result. So it's a tale of two regions, BC down and U.S. South up.
Yeah, boy, look at, the symmetry on that on that chart is pretty strong, that's for sure.
Yeah, and the thing that kind of like if you go to the next slide, it's about the U.S. South. If you want to leave that one, it's so slide 3. It talks about, it's just a slide on the U.S. South capacity, and just shows a map of all the capacity increases. 60 odd projects since 2018. And when I look at the data, though, we've had about 7 billion board feet of new capacity installed in the South from 2018 to 2022. But you look at the production increase over that time frame, it's only 3.5 billion board feet.
That's what Greg pointed out when we were looking at your slides this morning, and it made a lot of sense. So why is that?
Well, a lot of it's to do with starting up mills. It takes a while to get them up, especially the new high tech mills. Also, COVID slowed down the whole supply chain, and mills were knocked out for COVID reasons and so forth. That was part of it, and so that's and then labor shortages and so forth. So there's a whole bunch of things going on. I mean, nobody ran at capacity through COVID, so that's part of the reason. And then, but even going forward this year, there's another almost 1 billion board feet of new capacity that's slated to go in, and more in 2024. So, my view is that with BC starting to bottom out, we're going to have a lot of wood available in the U.S. South, stable in other regions in North America, and demand sort of picking up slowly. So I don't think we're going to have a problem getting lumber anymore as the U.S. South ramps up, and it's a matter of how fast the U.S. South ramps up. That is the real wild card.
Russ, what are current prices look like based on cost of production in the U.S. South? And then I want to talk a little bit more about Europe.
Yeah, and that graph on the lower left with all the orange, that just shows sort of the trend in delivered log cost to the U.S. South. I mean, they've been flat at about 45. That's what dollars per green ton. So that's about $45 a cubic meter, which is a very low log price, which makes it very attractive for sawmilling in the U.S. South. And the costs have been increasing a little bit, but I sort of have the costs roughly at around the best mills in the low 300s, and getting up to around 350, versus a market price of what, 475. So
So
there's
when you say 300, Russ, is that relative to like a 4 inch or a total cutting profile?
that'd be a total cutting profile. That's the
Okay.
total
Okay.
cost. And and again, I haven't looked at this for a bit, but it's the costs have increased with just labor and materials and supplies. So getting up towards 350 might be the more of the the better mills in that range, and the current prices for 2x4 anyways is 475, a little bit less for the product mix.
What's changed, Russ, in terms of North American, the the breakdown on North American consumption by producing region? I mean, I always used to say it's like a third, a third, a third Canada, a third U.S. West, a third U.S. South. What is it now?
See, I have that in my data, but not in these slides. So actually, I do have a. Well, I probably don't have it, but it's still it's about 50% U.S. South, and
50%.
I believe it's
50?
50%. Yeah, 50 is if, but I have to look at my data on that just to get it right. But it's been shifting more and more to the U.S. South
Sure.
and less to Western Canada, and then the U.S. South and Eastern Canada have been sort of stable. But yeah, the big gun is the U.S. South.
Yeah, I mean, because it used to always, I mean, the markets for years have been dominated by, what happens in British Columbia. And it sure seems that, now it's really what happens in the U.S. South is going to be the determinant on overall, like from a composite standpoint of lumber.
That's right. As I think about it, about U.S. consumption, about 55%, actually North America, 55% of the single-family homes are in the U.S. South, and that's the big consuming region. Then production, it would be diluted because of all the imports. But Canada used to have one third of the imports. It's down to closer to 25% now. So yeah, okay. Canada's whole market share is about 25% of consumption, and then the European and offshore volumes are another what is that, about 13% of consumption, I think it is. So
Russ, we still have don't we still have duties on Canadian lumber? Do we still have duties on Canadian lumber?
Oh, of course we do. We're talking about America, right? So yes, of course.
I mean, is there any? I mean, I'm not sure how deep you are in that in terms of the time period of like when that might come around and things may be settled, negotiated, ended. Do you have any insight for people on that?
No, I have zero insight on will there ever be a new deal, but I think there's a little more movement than we've heard in the past. And the duty is now at about, I think it's 8.99%, and it should go a little bit lower in September to around 8.5% is the initial talks. But I think the the pot of money is something like getting close to, I think it's 7 or 8 billion Canadian dollars. So that's growing. It's not growing as much as it was because prices are lower, but nevertheless, as that pot sits there, it's got to be a challenge for both Americans and Canadians about what to do with that. And at some point, you got to settle out, and who gets that pot of money, right? How is that going to be allocated as part of any deal? And that's going to be a sticking point, I'm sure.
Hey, Craig, before we jump into looking at the European lumber, I'd like to take a look real quick at slide 6 because it may explain also one of the reasons why that low grade spread keeps going out a little bit. It shows the Canadian U.S. lumber exports to China slumping, and I remember in 2019 and 20, we kept talking about how China would take up the slack on everything. Well, they're not as much. Hopefully Nick can throw that up on slide number 6.
Yeah, that's the U.S. and Canada lumber exports to China. So I mean, they peaked back in 2013, and that was really a function of all the low grade from BC. And I had a lot of arguments with some of the the forest minister of the day that the China market was not going to be sustainable because they're not going to keep building concrete apartments forever. In fact, the demographics were suggesting that would taper off, and it did. And it was all about the low grade. And really, when you look at the China market and you see what the Chinese really want, yes, they want some low grade for concrete forming and pallet material and so forth. But there's a lot of other sources for that from Europe, from Russia, even from China. So that market's quite a bit smaller now with the lower housing construction. And the fact there's so much, the Chinese want metric sizes for furniture, and they want different sizes for concrete forming in other parts of the market, not just close to Shanghai, which is where the 2x4 fit in. So it was a whole different market that once you sort of understood it, I could never see that being a sustainable market for certainly for BC, unless the prices would go higher. And China's been able to buy so much from all over the world that it's always the lowest price market you sell to, pretty much.
Yeah, well, even the U.S. Exports, even though they were smaller, is shrinking also over there. Would just make sense, right?
Yeah, and part of that's to do with the tariffs or the phytosanitary issues with southern yellow pine, and that's caused them to drop heavily. So southern yellow pine was growing very quickly, and it's just backed off to almost zero because of this phytosanitary issue about but the pinewood nematode that hits other countries as well. So that's another reason.
Tim Hansen had a quick question here. He said, sorry for, I know this has been covered. Everyone is saying the cost of production is above sales price these days. How are we certain, knowing wages are up? It wasn't that long ago that even Canadian mills' supposed cost of production was suggested to be $300 a thousand or so. I keep hearing now it's around 500 or more, but that sure sounds like a huge jump. Is this all accurate? One would think they have more curtailments by now, question mark. So I think we covered the southern pine part of it, right? But
and the easiest way to know that is true is by just looking at the company's fourth quarter financial results and that they showed losses.
That's right, losses, and that's of course big losses like in BC and probably small gains in the south and so forth. But yeah, I've been noodling a little bit this morning on the cost of production, and it's in BC, which is always a question. $300, maybe that was 20 years ago. I don't know, but that seems like that was a long time ago. We were at 300 because prices used to be around 300, and that was a long time ago. Maybe 10 years ago, but the the cost of production and see, it depends on the log cost, because the government stumpage, which is a very complicated formula, won't get into all that, but it lags the market, and so it's been prohibitively high, when markets are declining, and currently
then it's low when they go up.
Correct, exactly. So they make a ton of money when the prices are going up, and then they get killed prices are going down. So that's why they curtail. I mean, it's not fair to the workers. On average, they do pretty well, but the workers get the short end of the stick, which is my issue. But anyways, that's because they're publicly traded companies, and you got to make sure you're not losing money every quarter. And so that's complicated too. But the the stumpage rate in BC, it has dropped significantly. It's down around $25 Canadian, maybe $30 Canadian. So, less, closer to $20 US. That's as low as it's been in a long time. And that all of a sudden moves the needle and makes BC mills more competitive. But that's on the crown land, and most companies have tenure for about maybe 2/3. It depends on the companies, but say roughly 2/3 of their volume comes from that. The balance comes from open market timber. And that's also priced heavily by what's called BC timber sales, which is 20% of the harvest in BC. And that gets inflated because on the margin, companies are willing to pay a huge, premium to get that last bit of wood. So it distorts the market. So they're paying, they're paying $150 for open market wood, and their own log costs are about $100 in Canadian terms. And so when you average all that out, it depends on the company. Their log costs can be quite a bit lower or higher depending on the tenure volumes and so forth. So I sort of pegged the BC interior costs somewhere around. Let's see, I've done it both ways here. Somewhere around $400 for the better mills. That's on an EBITDA basis. 400, 425, back off some of the you want cash costs as low as perhaps 475 or 375, probably closer to 400. So that's kind of my noodling a little bit on what it would be, and I'm sure it's going to be a wide range in there depending on the company and where they're located and so forth. So prices are what's today, around 365, I think, print price. So
Yep.
That would suggest that even the better mills, their cash costs are higher than that, and they probably need they need prices in the low 400s to really, even mid 400s to really stay in the game.
Maybe tell us a little bit about what you found out in Europe.
Yeah, it was interesting talking to various people. It was a little bit different because the Scandinavians, their log costs are a little bit lower, and in Germany and Austria, the log price had really accelerated in the last few months. I mean, crazy log prices in a market that was declining. I mean, log prices. I mean, usually when it got to about $100 a cubic meter, that would be high, and it's about $110, $115 a cubic meter. That's at the roadside. You still got to get it to the sawmill. So the log costs have really gone up. So that's and the lumber prices in Europe are finally starting to move to the point where they're kind of in a break-even position. Probably Germany, Austria being in a tougher position than Scandinavia. So. And they start looking then I started noodling around again, looking at the U.S. price, and my sense is, the Germans probably can be as low as about 450 delivered to the East Coast, which the current price is in that range, right? So.
Hey, Russ, if you think about it, though, Greg and I are talking about, so 450 East Coast is back to a 300 to low 300s Western mill.
Correct.
Right? Because think 2x4 16s we're trading at 450 on the ports, and that goes back to a 300 Western mill. That's just so everybody knows, to put into perspective what that cost is.
Exactly. So that's their costs are pretty reasonable right now. But if you move into sort of Germany, Austria, that's going to push it closer to 500. Again, depending on how much is some of the beetle wood is being processed at lower costs, but a lot more green wood is available. So it really depends too on, and then they have other multiple markets. And that was the other thing about, so the cost structure is one, the U.S. market still seems to be favorable for some of certainly the Scandinavians, favorable, marginal, but not negative. Whereas in Central Europe, the margins were pretty much break even at best with the log costs going up. So if you could it used to be, a little while ago, I would have thought the U.S. market was where they'd push the wood and to get wood out of the European market to push up the European market. And that's still in effect right now, because the European market is still pretty slow. And if they can get more wood out of Europe, even at a loss, that supports the European price. And so I think they can actually be, I'd sure like to hear anybody else's comments on that. But my sense is they're even at these at those prices, they're still around break even getting to the East Coast. And in Central Europe, prices are coming up, and they're going to start to make some money finally. But it's sort of they're not in a very good position either way. So if they want to keep operating, the volume, the excess volume, I think will start coming to the U.S. by the bigger players. Smaller players, I hear, are starting to retreat because they don't like the lower prices in the U.S. and the uncertainty. So,
but we're getting reports of reduced bookings now for second quarter arrival. I mean, there was a huge buildup of shipments into the ports in the fourth quarter, which seems to be getting worked down. I think there'll be some normalization of the price relationships over the next few months. That's for sure. Russ, this has been as always amazing. Your insight and the data and the knowledge that you have to share. I mean, I always come away with a tidbit that I can use, and I appreciate that.
Sure, I'm happy to participate. And by the way, Greg, waiting for one of your polls to come out. They were always very interesting to see where the consensus is. So
I was just talking about that the other day. It's getting to be time to put another poll out. So thanks for that reminder. I'll noodle. I'm not a pollster, obviously, but I continue to try and refine them in terms of like how you ask the question has a big influence on the answers you get.
correct.
It's like statistics. Tell me what you want to know, and I'll tell you what the statistic is to back it up.
Exactly.
Well, Greg, Russ, I appreciate all your time today, and we'll look forward to it. And Russ, what's the best way somebody can get a hold of you if they need to?
Yeah, questions, emails probably best. Russ Taylor at russtaylorglobal.com.
Sounds great. Well, you guys have a great rest of the week, and we'll look forward to doing this again soon.
Great.
Thanks, guys. Have a great day. Cheers.
You bet.